Hello, and welcome to Trestlebridge Capital's monthly market and economic recap. Before we begin, here's a quick note from our legal team. Today's discussion is hosted by Eric Jefferson, managing partner of Trestlebridge Capital, as he breaks down this month's key market updates. Let's get started.
Welcome to the Trestlebridge Capital Market Update for April. I'm your host, Eric Jefferson. Happy Liberation Day. A day later today, we'll get some clarification, hopefully, on tariff policy. We'll talk about more of that in just a minute. Before we do, though, want to recap trading the first 3 months of the year. What a volatile quarter it has been. S&P 500 still down about 4.5% year to date. That represents 9% pullback from its all-time highs. Granted, we have clawed back some of that territory. At one point, had eclipsed double-digit losses there. When you think about some of the segments of the market, value held up considerably better than its growth counterparts. Value virtually flat, growth down about 8%. And a lot of those declines in growth were really from those concentrated mega cap technology stocks, the Magnificent Seven, that have carried the market for the last 2 years. I've seen a lot of those revert back to their means. Magnificent Seven stocks down about 15% year to date, still 20% off their all-time recent highs. Now we think about what were the catalysts for this. As the expression goes, uncertainty fuels volatility. We have certainly had a bull market in uncertainty, mainly around tariffs. Hopefully we should have some clarity later today what those policies will be. Initial suggestions are about 20%. Again, do still view that as somewhat of a negotiating tool. When we think about tariffs by themselves, though, keep in mind those are not necessarily recessionary in nature. Obviously, like anything, comes down to the details. How much are they on what goods? Which countries, friend or foe, are ultimately being assessed? And then ultimately, what are those repercussions, particularly around trade going forward? I think the issue with all of the uncertainty on tariffs is more the uncertainty itself. Again, if you're a large multinational company, you're likely delaying significant capital investment until you have an understanding of what those policies are going to be. If you're thinking about launching a new product or opening a new production plant overseas, you need clarity on what your pricing power, what that strategy is going to be. The path of least resistance is to simply wait and see what those tariff policies will be before you make those sizable investments. Those obviously in turn help contribute to the economy. The question here, as we wait and see, that will marginally erode growth every single day that those investments are put on hold. Conversely, every day people sit and wait, think that only further increases anxiety. And you're starting to really see that represented in a lot of these sentiment data. We think about stocks rallying over the past couple days here. I think that largely a function of the Trump put coming back to life. The Trump put, really just the thought that President Trump, his willingness to potentially use these tariffs as a negotiating tool to ultimately arrive at some concession he was looking for. Keep in mind, I think this is something the market has discredited for a while, but the end of the day, that would be very easy for President Trump to back off some of that rhetoric. Keep in mind, there's really no constituents that are pounding the table saying we need better tariff protection. That was something he had promised, talked quite a bit about on the campaign trail. To his credit, he has certainly delivered on that. I think it would be very easy, though, for him to point to a few concessions, call that a win, and then move on. Certainly that would be consistent with his negotiating style that we've seen in the previous administration. When we think about the ultimate impact, again, assuming we do get some clarity here, the question then becomes, do we go into a recession or not? That's a word that has gained a lot more traction as of late. When we look at the data, really seeing two narratives. Looking at the hard data, unemployment still remains well below long-term averages, real wage growth above inflation. So for all the talk of inflated egg prices, consumers that are still employed are making a paycheck, increasing their purchasing power relative to the end cost consumed. Obviously, though, that is a tiny margin. The question, though, when we look at the sentiment data, so a lot of the surveys where people indicate their thoughts, their outlook for the future, that has sharply traded lower. The question then becomes, do we get some clarity that ultimately will allow people to feel more confident with the direction of the economy, or is that as many of my counterparts have described it, the self-fulfilling prophecy of recession come true. If people are still concerned and then that starts to impact their behavior, a la spending, is that almost a recession that comes or stems from concern? That's something we'll continue to watch very closely. Have seen some softening in the consumer data, but nothing to the point yet that screams imminent recession on the horizon. Good news, if recession did incur or did come to fruition, we have started seeing the bond portion of a 60-40 portfolio behave as you would want it to. The negative correlation between stocks and bonds. Bonds, interestingly enough, actually marginally positive on the year. That's a function of some interest rate cut expectations increasing. Again, expectations likely for a possible recession. You generally see rates move lower in that environment. Lower rates, a tailwind obviously for bonds. So something watching very closely. Certainly these are very fluid times, but keep in mind when we look at the hard data, that is difficult to manipulate. That still suggests we are full steam ahead. The rate of growth, that likely will slow, but I use the analogy, if you're going 80 and a 65 and then you take your foot ever so slightly off the gas, going 70 and a 65 still gets you to your destination ahead of when Google Maps suggests your ETA would be. I think you can draw a lot of parallels to the economy. We had some phenomenal years of growth. Granted, a lot of that was funded via government spending. With the efforts at Doge, that likely to be less of a tailwind going forward. But when we look at the macro data, based upon where we are today, overall the economy does still have a firm foundation. I think the next move, both for the economy and for the markets, will likely be a function of, do we get some clarity on what those policies are? The end of the day, companies want to know what the rules are, figure out their strategy accordingly. Having that clarity, hopefully, should provide that comfort, that guidance for corporations to go out, to run their businesses, to evolve in the means necessary for them to still remain competitive in today's market. I hope that helps. As always, happy to go into more detail. I want to thank you again for taking the time to join us.